Well, hey, it's Matt with Midwest Medigap. Thanks for joining me here. We get a lot of questions about long term care. A lot of our clients express concerns about it with the cost, and then also, what do I do about it? Or maybe you already have a long term care policy and the premiums keep going up. There are new solutions that have come here as of recent that the old traditional way of doing long term care, where you pay premiums and then you may or may not use it, that's kind of going by the wayside here. So I wanted to just update everybody, and maybe you've looked into long term care in the past and got declined or it wasn't a fit. We run into people, it's a big concern of theirs every day we talk to them. So I want to run through maybe why you might need long-term care, or maybe why you wouldn't need long-term care in this video. So let's talk about some of the facts first. The fact is 70% of us are going to need some type of long-term care. If you're age 65 or older, there's a 70% chance you're going to need long-term care at some time in your life. And if you're a couple, then it's over a 90% chance. So one of you is going to need care at some point, almost certainty. Now, the other problem is the average cost of care is over $112,000 as of this video, and it's projected to go up to $141,000 by year 2030, and that's not very far away. So, what do you do about this? It's a big problem that a lot of people have, and how do you pay for it? And part of this video, we're going to talk about that, but this is just another article that talks about the average monthly cost. You can see on the low end, it's $4,000 a month as of this video. And then, this article talks about dipping into savings and how people underestimate the cost of long-term care. They think maybe it's not going to happen to them, so they don't realize how devastating it can be. And according to most financial experts, a long-term care event is considered the biggest potential financial impact on a retiree's savings. So we know it's a problem, but what do we do about it? So what are some of the objections that people have on why they wouldn't get long-term care coverage? One of the biggest ones we see is, well, I'll just self-insure. Okay, I'll just pay my savings, investments. My kids will take care of me. All right, they say, my kids got me. They'll handle me when I need care. None of my relatives live very long. I already looked into it, can't afford it, or I got declined. And if it comes to that, just take me out back and do away with me, which we know that's not real serious. But let's talk about people who say, well, I'll just self-insure. It's not really self-insuring, okay? Most people who give us this objection, they say they've done a good job of saving, right? They've worked hard their whole lives, and they got a nest egg that has a bunch of savings there or investments. And a lot of times even their financial advisor will say, hey, you can just self-insure, right? You got the money, you can just self-insure this. By definition, insurance is the pooling of risk, okay? So there's no such thing as self-insuring. The correct term, what it really is self-funding, okay? There's no insurance involved, right? So, and when we see people talk about this is the path that they want to go, the reality is, for most of them, they don't think it's going to happen to them. They're healthy. They can't picture themselves in maybe 10, 20, or 30 years needing care or not being able to actually take care of themselves, right? Because it's just not physically, their brain doesn't let them go there because they're perfectly fine right now. So the biggest thing we see is people have a price objection with it. Well, that's only in the absence of value. Guess who the people are that we never have to think about price, or they don't ever bring up that objection? It's the people who've already been through a long-term care event with a family member or friend or neighbor or somebody. They've seen the devastation firsthand, and they say, hey, I'm not going to have this happen to me. We're going to do something about it. So the other objection we get is kids will take care of me, right? Well, that's a possibility, I guess. If you've left them no choice than to do that, they're going to do it, right? They're your kids. But do you really want them taking care of yourself? Is that really what you want for your kids to do, to probably have to put their lives on hold to take care of you? Because it's not just something that they can just come and go. It's going to be a full-time job, and they're going to have to maybe take turns and put their lives on hold. Maybe they have kids, and it's just going to create all kinds of stress. I can tell you from firsthand, seeing this, it's going to create problems, and the children are going to be very stressed out about that. So do you want them to be the caregivers, or do you want them to be there for your kids just to watch over you? And the other one is I can't afford it. Some people have looked into long-term care premiums in the past and it was way too much, or they got denied. And I'm going to talk a little bit more about how you can avoid maybe getting long-term care and having to pay monthly premiums. That is still a thing that exists, and it is a right fit for some people. But for some people, if we can avoid the premium part, then that's more ideal. So why do people get long-term care insurance anyway? If you really think about it, you purchase long-term care coverage to protect your family. Long-term care insurance or coverage provides the money to pay for the care so the family doesn't have to focus on the money. Okay, so you don't want your family fighting over if there's a long-term care event. We don't want the conversation to be, well, where do we go into this account? Do we get it from that account? Where do we get the money from? Even if you have the money saved to pay for it, the conversation always turns into an argument on where to get the money from. So really what you want to do is have the conversation be about you, and hey, where are we going to go set up mom or dad's care? And we know the insurance or the coverage, we got the money, now we just need to figure out where we're going to go, and that's really where we want the conversation to focus on, is on you, not like how do we get the money and where do we get it from. So let's talk about some options that are available now that a lot of our clients have taken advantage of. Okay, there's new hybrid long-term care options available, and the traditional way of you use it or lose it is gone by the wayside now with this. So this is great for those people who don't want to pay premiums for something you may never use, and it's great for those who may have some pre-existing conditions. Maybe you've gotten declined for long-term care in the past. So those are two great options right there for people. And if you have lazy money sitting around, okay, so for example, you have maybe money in an old annuity that you took out a few years ago, life insurance, maybe you have an old life insurance policy that has cash value in it that you don't really need or use anymore, or you have a CD. A lot of people have CDs that they just kind of have as their safe money, right? Or cash and savings. All these are great options where you can take money from places you already have it parked at and just reallocate it. And so you're not even having to find new money. You're just taking money you already got and just repositioning it to help pay for your long-term care. So let's look at this example. This is an example of a couple of ours that we just did this for. So you look at a male or female age 70, and the way it works is you put in a premium, just for easy numbers here, we put $100,000, okay? And what that's going to do is create instantly a pool of money of 3 times the amount, at least, for long-term care. So if you put in $100,000, you're instantly going to have $300,000 worth of coverage for long-term care. That's just for one person. Now, if you're a couple, a joint policy, and you put in $200,000, well, then that creates over $600,000 between the two of you that you can use for long-term care. So just by simply taking, if you had $100,000 in the CD or an old annuity and you just repositioned it over here, you would still have an account that's going to grow. So if you passed away, you're still going to have, after year one, your beneficiary is going to get this money. And let's say maybe in a few years you needed long-term care coverage, well then you're going to have over $4,000 a month for long-term care coverage for 6 years, okay? So it's a really powerful way to prepare for long-term care. And some notes here, like I said, you can just exchange from one annuity. So if you have an old annuity here that's not really doing anything for you, you don't need that money, you can just reposition it and move it over into this annuity. And a lot of people have done that. They've seen a lot more value in having it parked over here because then they get the additional long-term care coverage. So there's a bunch of different ways that this works for people. But this kind of gives you an idea on what it looks like. It's going to instantly create 3 times the amount. Whether you put in 100,000, 200,000, you could do less than that, you could do more. But this is what it's going to do for you. It'll create a monthly amount of dollars that you'll have for long-term care. So some final notes on this. Medicare and your supplement plan is not going to cover you for long-term care. Okay, so just so you know, people have a Medicare supplement. You unless you have something else, you're not going to have coverage for long-term care. We could do the best Medicare supplement plan for you, and if we still leave this hole open for your retirement picture, this is where your potential to have your assets depleted is greatest, is with a long-term care event. Okay, so if you looked into this in the past and you were denied with long-term care, let's revisit that, because we've gotten everybody approved so far. There really is no issue with, no matter what your health is, we should be able to get you approved. So what you could do here, if you're interested in more information on this, there should be a link somewhere that you can click to book an appointment with us, just a phone consultation. We can talk about your situation, get you some more information on this, and see if it would be a right fit for you. Or you can simply call us and set an appointment that way, and just let us know, hey, you're interested, you saw the video and you wanted some more information on this. And either myself or someone on the staff here, we got a team of experts here that are fiduciaries, certified financial planners, that can help you with this, and we all specialize in this type of stuff. So if this sounds like something that you may want to look into, book a call with us and see if it would be something that would work for your situation. So I hope you enjoyed the video, and you guys have a great rest of your day.